Hello traders, Gary Wagner here. Approximately 1:40 in Honolulu, 6:40 in New York. It is Monday, first day of February 2021, and this is the daily report for gold and silver. Phenomenal upside spike in silver today. Respectable gains in gold. I think that gold is building a base in this area and that silver is continuing to outperform gold. Of course, on Friday, we added to our long SLV positions. We'll discuss all of that on the show. But first, let's take a look at closing prices of gold. Very respectable gains in the precious metals complex itself, with platinum, palladium, gold, and silver all posting gains on the day. However, it was platinum and silver that really outshined the performance of gold. Currently, we have gold bid up about 0.75%. Net gain, $13.50. This base is the most active April contract at 1863.80. GLD also gained nicely. We are long GLD, and that gained $1.62 a share, approximately a 1% gain at 174.23. This first chart that we are looking at is a daily candlestick chart representing gold futures. Overlaid on the chart, first is a very short-term Fibonacci retracement beginning at the lows that we saw in November of last year when gold tracked as low as about 1767, that's right here, up to 1967, which was the high during this rally. It covers this entire rally. We are currently at a 50% retracement. But what's most important really to me right now are the moving averages, because you can see that we have really strong support which matches the low of the day at the long-term 200-day moving average. The 50-day moving average, which sits at 1858, was also involved in terms of the range, but gold managed to close above both of those particular averages. That to me is a very bullish indicator that we have found real genuine support from these lows at 1800 and are looking for prices to continue tracking higher. We are long GLD from 172.14. We are maintaining our stop at 170.11. Another very noteworthy aspect of today's gains in gold, silver, platinum, and palladium is they occurred concurrently with dollar strength. The dollar was up 0.52%, a 0.5% gain at 91.04. And when we look at the Kitco Gold Index, we can see exactly the effect that dollar strength had on both gold and silver. Because normal trading, according to the index, resulted in a net gain of $22.55, and dollar strength took about $10.35 away from that pricing, resulting in net change of $12.20. So we've got the dollar continuing to have strength back above the 50-day moving average, but it was unable to stop the incredibly strong momentum, I believe, that's building in both gold and silver, taking those metals to higher prices. But it was silver futures as well as the ETF SLV that had dramatic gains on the day. Silver is now close to last year's high of about $30 at $29.25 after a $2.33 gain. That's almost a 9% gain in a single day. It began on the open yesterday in Australia, which of course was Sunday in the mainland as well as Hawaii, and then spilled over into today's trading activity in New York. This first silver chart that we are looking at represents a daily candlestick chart of March futures. You can see the activity that occurred today and the gap that was created in trading in Australia as it opened up. Our close on Friday came in just shy of about $27 per ounce. The market gapped open much higher, coming in above $28 an ounce. It traded beyond the record high that was achieved in August. It did challenge that. We call this a scouting party. In other words, it was testing the fortitude of the short players in the market. It was an unsustainable move at these highs, but it still had incredible gains of about 8.68% at 29.25. The other thing that is extremely noteworthy with silver is the fact that we did get a golden cross between the 50 and 100-day moving averages last week. I've converted our daily candlestick chart into a Henkin-Ashi chart because especially when you get gaps in the market, to really gauge momentum of a current trend, the Henkin-Ashi stands out head and shoulders above any other type of chart. When we look at this chart, we can see that the momentum has been building over the last couple of days. It's significant in that we've had a series of higher highs, but if you look at this chart, you've got an extremely long body. In trading today, we can see that the highs were challenged. I'm talking about the record highs back in August, and were unsustainable, at least for today. I am looking for silver currently not only to track above $29 per ounce, which it is, it's at $29.25, but actually to take out 30 and to move to higher ground. Right now, my interim projection is that silver could reach as high as $35 on this leg of the rally, short term. Longer term, it could approach towards the end of the year the all-time highs, which sit at $50, and that has already occurred on 2 occasions, unlike gold, which hit a high of $19.20 back in the middle of 2011, and it took a lot of time, in other words, up until 2020 to break that record high. However, with silver, it has had 2 record high tops. Of course, the one that occurred during the banking crisis and recession that began in 2009, that's when it achieved a price of $50 per ounce. Prior to that, you can see this top that came in right here in 1980, and this is when the Hunt brothers tried to take over the silver market. So when we look at current pricing in relationship to both of those moves, we can see that we're pretty much matching, and this is a quarterly chart to get this much data in, but we're pretty much matching where the open and close was during that particular quarter when silver ran to approximately $43 per ounce. But traders, it is SLV that, if you recall from Friday's trade alert, we have now put on a second leg. Our first leg came in at approximately $22.95. We have a stop at $21.95. And then our entry on Friday came in at $24.60. The market itself closed at $26.76 after posting a 7% gain on the day. We've kind of doubled up on that ETF. We are looking to position ourselves in futures, but we've got some extreme volatility, and for that reason, I'm being a lot more cautious. But I do see moves and plays in both of those future contracts, gold and silver. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.